Hey guys, Mike here. So today we're going to talk about Palantir stock, and obviously there's news coming out. It's been a rough couple weeks, and just like with any other high growth stock, it's been beat down, right? And so is there a risk that this is going to go under 10 and down to 8 as some people are calling for? We're going to look at that. We're also going to look at things that you need to be paying attention to, and I think is any shareholder, anybody planning on getting in this stock, certain things have to shift for the future, right? For this company to absolutely reach its full potential as far as stock price is concerned, okay? And there's another company they keep getting compared to. I'll show you that. And I don't think it makes any sense. It's just not apples to apples at all. I'll show you why. And I'll also show you why, Palantir in certain regards looks better, right? The other company's got some stuff on it, but when you look at things I'm going to show you, I think it looks like it's even better position. And, the good news is now I'm going to look at it as a positive. A lot of people look at this as a positive is ARK, I'll show you, is almost like they got a smidge left of shares. I mean, it's like 30 shares left or something. I'll show you. But they're almost sold out of that. So they almost kind of coming out of that negative, position over there because remember, ARK Invest has an ETF that's literally shorting it. Okay. And the shorts are just trying to pound all those stocks down. So now by coming out of all those funds, we'll see. And you saw as soon as they started selling, they sold the majority out, it started to move up, and then the market just completely tanked last week and started selling off. And so, it's moving with the market. Obviously, this week's a big week coming up because we got inflation data could be coming out this week. So that's a whole different thing. And so, we'll get into all that. I think it's extremely important to look at this if you are planning on getting in the stock or if you're in the stock already, okay? And so another thing, you guys are always asking me to keep you updated on any kind of specials going on with anybody like that. And so Webull obviously has a lot of specials going on in March right here, as you can see. And so the first thing they got going on in March is you get 2 free stocks just for opening an account. That's all you got to do. The stocks are valued between $300 and $300. And then on top of that, you get a deposit bonus of any amount you put in there. By the 15th, you get 3 free stocks valued between $7,000 and $3,000. And then if you want to get into crypto, they'll give you $5 of free crypto. You can choose between SHIB, Doge, Bitcoin, ADA, and ETH. All you got to do is open the brokerage account, make an initial deposit of any amount, activate the Webull crypto, and then complete 1 crypto trade that's at least valued at $1, and you can get $5 of any one of those choices that you choose, okay? And so if you get anything out of this video, hit the like and subscribe button, hit notifications all, and let's go ahead and get into Palantir stock. And so the first thing that came out with Palantir is talking about Jacobs and Palantir launched global strategic partnership for data solutions in the water industry, okay? So this is a big thing. It gets them into a whole new industry. Water is an enormous industry, a lot of money in there. And this is the key right here. The water data analytics solution aggregates and analyzes plant data to manage and optimize water and wastewater treatment plant operations and maintenance aimed at reducing costs and improving plant performance. And here it is. The partnership plans to expand and commercialize this innovative solution. And so they've done this in the mining industry, the healthcare industry, the banking/finance industry, and other industries as well. But the key is the commercial side of this. And so this will be big. The company they're working with has been in this for quite a while now. So I think it'll be a good partnership. And it's another industry for them to break in with. And it's a very important industry, okay? The water industry is huge. There's a reason why a lot of other companies have gotten into this over the years because they make a killing doing it. And so I think it'll be really big for them. So this is something to watch out for. And so now let's go into the chart here, which doesn't look that good because you got it just trending down right here, down 13% after it actually had rose up after really the ARK news and things like that and earnings. But you see right here, it's just getting rejected off of that resistance level, which was support at one time. You can see right there, that is the last line of defense. And the reason why that is the last line of defense around 975 is because that was the IPO price. And so there is nothing else below that to save the stock. There's no more support levels below that. And so that's what a lot of people are looking at right now because it's kind of been moving with the market and the market's been moving down. And this week's a big week. And so if we get some crazy inflation numbers coming out that beat what people think is happening, or the Fed makes some crazy statement and the market sells off, then guess what? Palantir absolutely could break that resistance level, and that happens. There's just nothing below it, right? We'll be in no man's land. And so, just be warned on that if it happens. And if you're dollar cost averaging in, obviously, a lot of people say it gives you a great opportunity because the valuation comes down even more. And so the other company that had the really rough week that's in the same industry that Palantir is and the one that you compare to all the time is Snowflake, right? They got crushed after earnings. I mean, look at this drop right here. They ended up dropping about 18% after earnings, then continued to run off the rest of the week when the market sold off at 21%. They lost over 20% of their value in 3 days. And this is what I'm talking about. If you just type in Palantir versus Snowflake and you just scroll down right here, I mean, you can see there's no shortage of articles and companies and videos that come out comparing these two companies. And so again, I don't think it's apples to apples at all. And the reason why really is because, you know, obviously Snowflake has a lot of customers. I mean, almost like 5,600 customers, and Palantir obviously does not, right? Very small percentage. Snowflake spends a boatload of money, which I'll show you, on their marketing, big sales team, and all that stuff. Palantir has a totally different way of attracting customers, even though they're starting to build a sales team. You know, they take their product and just kind of conform it to who, whatever company is giving them the contract. So they're in the negative for the first couple of months before they ever start generating a penny on that contract, to make sure they got the relationship built and to make sure that Foundry or whatever product they're getting actually fits that particular company. And so, you know, that's two things you can look at where they're totally different. And there's a few others, but really the other thing I'm taking a different approach to this is, remember, Snowflake is backed by Warren Buffett, right? One of the greatest investors of all time. And so, you know, one thing about Snowflake that Palantir doesn't have, actually there's two different things I'm gonna show you right here, is institutional support. As you can see, Snowflake's institutional holdings is 68%, which is actually double what Palantir's is. They only have 34% institutional holders. And then, so most of those are what? Retail investors. And then if you go over to the analysts, they love Snowflake. You can see right there, 13 buys over at TipRanks. Again, link down the bottom if you want to sign up for TipRanks. But look at right here. This is over the last 4 days. Look how many analysts either gave it a buy or hold rating. Most of these are buys, just in the last 4 days. So a lot of analysts cover this stock, and they absolutely love it, okay? And you look at Palantir, though, we'll type in PLTR, and you can see hardly anybody covers the stock. And look at the top analysts, only 7. 1 buy, 3 holds, 3 sells, the polar opposite. They rarely ever come out and say anything about the stock. When they do, look at this, sell, hold, hold, hold. That's what you've gotten, right? In the last 4, which in the last 17 days, pretty much negative, right? And the other thing is they don't have the stigma that Palantir has of, you know, working with the CIA, helping hunt down terrorists, you know, all this stuff, being very secretive, not knowing what a lot of the contracts are. I mean, and so that's what, you know, Palantir does have that stigma. Some people do and always probably will hold that against them. And so that's another thing. But then if you look at, you know, just some financials, you can kind of see how they generate their business, what the balance sheets look like. You know, because you look at Palantir's balance sheet, which is really actually should help them the kind of environment we're in. You know, $2.3 billion in cash, but you just look current liabilities. They're not a debt-ridden company at all, right? Total current liabilities, $660 million, right? They literally have, what is that, like 3 times the cash to pay off all current liabilities. You know, that's what they're, and in total liabilities, you know, $956 million. And so, you know, nice balance sheet. And so you look at that should help them in this environment, believe it or not, because since they don't take on debt, those higher interest rates shouldn't affect them as much as it will other high growth stocks. But then you look over at Snowflake's balance sheet, and you can see, I mean, they have half the cash, $1 billion. And then looking at the income statement, you can see right here, and this is important, look at how much they spend, cost of revenue, right? First of all, they decreased their cost of revenue from 2020 to 2021 and actually made close to, was that $450 million more dollars on that decrease, but they only spent $340 million for the year of 2021, which is big, right? And then you see the loss of operations, $411 million. And you look up where they're doing this at, you see what their sales and marketing is, pay attention to that, research and development, and then G&A. Pay attention to those numbers, because when we switch over and we go to Snowflake right here, you can see they spend about $150 million more dollars. And theirs closed out at a different time, by the way. It closed out in January 2022. But they spent almost $150 million more dollars for $300 million less in revenue than Palantir did. Okay, and you can see 2021, wow, they spent, and you compare that to revenue, a boatload, right? Well, then you look at their operating loss, higher at $715 million, but the difference is look how much they spend on sales and marketing, you know, $743 million. It's about 100 and something million more than Palantir. The big difference is, if you look right there, is the G&A. Why? Because stock-based compensation. They have way less stock-based compensation than Palantir. And of course, that's one of Palantir's Achilles heels, right? Is the stock-based compensation. It is a lot more and has been for a long time. And so, you know, the one thing is, at least, the CEO, I feel like, has got his head out of his butt and realized the problem, and that's why he addressed it last time, saying yes. I think he realized, yes, we have to bring that down. It will be normalized. That's one of our focuses. Versus in the past, he would say, hey, if you don't like it, don't buy the stock. It is what it is. We're going to reward, our people, blah, blah, blah. And I think that's one of the things his board probably talked to him and said, we got to get this under control, because if you look right here, Palantir lost 27 cents per share at an operating margin of negative 27% on a GAAP basis. When the stock-based compensation is stripped away, this metric improves to 31%, and they spent a massive $778 million paying his employees with stock during 2021. And so the fact he said that is a focus, is a good thing, because when they have I think it's 1.9 billion shares or something outstanding. It's some massive amount, right? When you compare it to Snowflake, it's not even nowhere near close. Okay, it's massive, and it's a cheap way to pay your employees, but it dilutes your current shareholders, right? And the more shares out there, larger the market cap is, harder it is to make big moves up in the market, right? And so that's one thing, at least he has addressed that. We'll see if they can focus on it, but that's one thing you need to pay attention to, because and it has been decreasing. I've showed you that. But if it continues to decrease, it should be good. If it doesn't, it just stagnates out to stay at that level, that is a problem for the company, and more importantly, the shareholders, okay? And so as you can see, on a non-GAAP basis, they are profitable. On a GAAP basis, they are not, okay? And, one thing I did read an article, and it makes sense, is that's very important for this company, is the level of upselling they do to current customers. It's basically called net retention rate. And so if you look at their net retention rate, for the fourth quarter, it looked good, right? I mean, commercial overall 113%, commercial U.S. 150%, commercial international 103%, total government 146%, U.S. government 141%, and then international government 161%. And so I think it's a number we need to keep an eye on, plus how many they're adding to the sales force and what are those sales force bringing in, right? Because the other companies they compete against have big sales forces pushing it. So we need to look at the number. You see right there is what they spend on marketing and sales. We need to track that number. Is it increasing, decreasing, or staying the same? Okay, and then what are those people bringing in versus what are we paying them? And so, at least I think he gets the point. Like, in order to keep up and grow and hit those growth numbers, you have to have a sales force to actually push it, especially in Europe, as he mentioned in the call. I told you, and I'll link that video at the end if you hadn't heard it, because if you're an investor and you hadn't heard that, you need to listen to him, okay? And so I'll put that at the end. The other thing is, I want to go back to the chart, because you look at the chart and it looks almost identical to another chart. So if you look right here, I've added this descending trend line, which you can see it's bounced off of multiple times. And so we're not going to be in an uptrend until we get through and break through that. I've added in your EMAs, and so we can't even get above the 50 right now. We're not even close to that. And so we got to start reclaiming these EMAs here as well. But first, you have to break through this, right? And what's funny, if you look at what chart is identical to ARKK. If I didn't have this up here, you would think this was Palantir's stock chart. Look at that. So it's just bounced off. It's been this downward trending line since November. And again, look at ARKK. Until it busts through here, it'll never reclaim the 50 EMA. And so it's just funny to me how they're literally identical. And the good thing is, like I was going to show you, this it shows you basically how many shares they have left. They're just dragging it out. This is on March 3rd, but they sold some on March 4th. Sold 25 here, so they have 25 shares left there. And then they sold 16 shares here. So I'm sorry, it's 40. So they have about 40 shares left to get rid of probably this week. And I don't think it was a coincidence that once she sold the vast majority, 90-some% of the stock, it started to go up. Right? I think it ran up 13% or something. So, I don't think that's a surprise at all. And I think, maybe, let me know in the comments what you think, but it might be the best thing for it, maybe short term, maybe long term, who knows. But again, I'm never going to compare Palantir to Snowflake. I just want to show you why. But the other things that has to happen is analysts have to get on board, right? Because they have to get them on board, because, what runs the stock up very quickly? Price upgrades, right? They don't have almost any analyst that loves them, right? The other one is they have to get institutional investors in this stock. The only way to do that is they usually do very well in earnings, but again, it just doesn't seem to attract them. But eventually, there's going to come a valuation. The institutions can't ignore it. They're going to say, man, this is too good. This is too good right here. Let's go ahead and get in. And so, I think that's another one I'll be tracking as if it does continue to drop lower. We won't get those probably until April because they don't, obviously January through March, first quarter. And so, but it's going to be interesting to see is that number start to move up because that helps stabilize the stock. But I think as the valuation comes in, I want to see if institutions start to scoop it up as well. And so, because they buy in big bulk, they don't buy 100 shares or 1,000 shares, right? They buy millions of shares. Anyway, I want to bring all that to you. If you got something out of it, hit the like, subscribe button. Really appreciate it, guys. And I'll see you Monday.